Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, this is Rob Clayton and I hope you're having a fantastic day. It's that time for our daily webinar and there's lots to talk about, especially when you look at this Australian dollar trend. Over the last 7 consecutive days, we can see the market is edging higher and still holding towards that 60-day simple moving average, which is seen around 66 figure 30. Keep an eye on that level. As previously seen back in early January, the market was rejected and may find a bit of profit taking as we approach this area, with any pullback on the day expected to find support around 65.25. Looking to the euro, the market still holding to a relatively bullish case, with the ADX supporting the RSI and the MACD, and along with that, with the break of this down channel, gives us further scope towards a region of 108.70.80 and maybe on towards the region of 109.35 to 45. Following the release of the US FOMC minutes from January 2021, failed to really contain any real major surprises. Following Federal Reserve Chairman's statement recently in the post-meeting press conference in January, he expressed doubts about a rate cut in March. As a strong labour market data and also reinforced expectations for delaying such a move. However, the US economy showing stronger than expected growth and core inflation ticking to 3.9% in January, investors appear to be reconsidering the timing of any potential policy loosening by the Fed. With the likelihood of any interest rate reduction in March diminishing, investors began now to see if possibly May could be the appropriate time for the Fed to start loosening this policy. We will now have to wait until the end of Feb for another significant update on inflation. This will come with the government's releasing its monthly personal consumption and expense report, which is the US Federal Reserve's preferred measure for inflation. So as I mentioned, the 7 days still looking relatively strong. We can see the euros heading on now towards 108.70.90 and 109.35 to 45, and any pullback likely to be shallow and see support around 107.95. On another story to this upside as dollar yen strengthens above 150, but still a little bit cautious towards that level of 150.60.65. I still feel there is further downside potential, but we do need to see a break of 149.75 to ignite the move and therefore give confirmation to the target of 148.15 to 35. Sterling still maintaining above this key level, seen at 125.45, and in light of the current pattern, I'm still holding the call to 127.15.25. Any pullback is expected to be shallow. Turning to the price of the precious yellow metal, the bullish trend continues into its 7th day, and now following the release of the US Federal Reserve's minutes, has found the dollar weakening. After slipping through 104, currently sits now at 103.95. The upside potential still holds towards 2038.42, and any pullback still believe should be shallow, as we've seen from this recent price action, and finding support anywhere from 2015. Wrapping up with oil, well, the market still holds to its gains after rebounding and looking now towards that key level of 78.50.60. A break there would negate the recent bearish outside range day and reinstate the move to $81 to $83 a barrel, with any pullback finding support around 76.70 and a base at 75.45.50. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the day.